Good evening, everyone, and welcome to another technical analysis. My name is JR, and today is a Tuesday, October the 14th, 2014, 5:30 p.m. Eastern Standard Time. Quick analysis, try to keep it under 6 minutes, just giving you guys some key points. A lot of bullish signs in this market, and I'll also do the oil analysis. A lot of you have been asking me to do an oil analysis, right? So this is your monthly chart here. Right, monthly chart here on this is your monthly chart on gold. As we can see here, this is your zone, right? We've tested this zone once, twice. The third time I expected a deeper penetration. We did not get that. Actually, in the process of forming a piercing formation. If we can end the month above 1250, then that'll be around 1245, 1248. That'll be very bullish for the metals, okay? And we've already tested this 20-day moving average a few times. So again, the more we test it, the more likely it is for us to break it. Stochastics are still moving south, so still room for further move, further downside, right? So I've circled here these patterns. This is called an outside day. The low is lower than your previous candle. The high is higher than your previous candle. It's an outside day. If it's red, it's bearish. If it's green, it's bullish. So on the weekly chart here, we've formed an outside day. Again, lower low, higher high, very bullish. Currently staying below 1242, 1240, 42, significant resistance. If we can surpass that level here, we'll most likely look to test the 1280 zone here pretty soon. Stochastics are moving a little bit to the upside, and again, really nice bullish engulfing candle here, as well as an outside day. So again, two candles in one, bullish engulfing as well as an outside day. It's your daily chart here. This is what I'd like to see for the market, right? So we broke through this this trend that we were coming down, came back down. This is a piercing pattern. This is what I'm looking for on this monthly. Right? On the monthly, I'm looking for a close above the 50% level. So as you can see, this giant candle here, this is 50% level. This candle closed above the 50% of this candle, and we moved much higher. That's what I want with this candle. I'd want the month to end up around this level here, 1245, 1248. That'll be above its 50%. On the daily, we've already done that. Right, so this is what happened. This is your bearish candle. This is 50%. This is a piercing pattern, and look what happened. That's what I'd like to see from the monthly. So what we see here is what I'd like to see on the month end. Right, broke through this key trend line that was bringing us down, but went above the line. Currently testing this resistance zone. This zone has been tested once, twice, 3, 4 times already. This one not really a test, but so close, only $2 away. I'll consider that a test. Above currently the 20-day moving average, right? And this is what I'd like to see on a perfect market, kind of like what I predicted with the Dow Jones. What I'd like to see is a move up here, test this zone, come back down here, right? Test the validity of this 20-day moving average as well as the lows, the 20-day moving average of lows, and a confluence between this trend line and this buy zone here. All right, so I'd like to see this thing go up. I normally don't like to see gold go down, but for the sake of these technicals, I'd like to say that I want this thing to go up, come back down. This level holds is off to the races, okay? Which is very likely to happen, being that this is a Bollinger Band here. So anytime you have confluence between zones and Bollinger Bands, really good opportunities, whether you're going to the upside or the downside. All right, so this is what I'd like to see. Let's look at silver. So gold's looking very, very, very robust, very nice. All right, let's look at silver monthly. Same thing, I've said it a few times. The bottom of zones are usually very, very, very nice. On the monthly, again, I'd like to see a close above. I wouldn't be surprised if we finish up the month, if we at least test the 1850 level before the month is over. Now, I'd like to see, again, for a piercing pattern, I'd like to see a close above 1820. Above 1820, that should be bullish, and it should take the metals higher. Okay, this is a piercing pattern right here. Okay, this is your 50% of this candle here. So already on the weekly, we've already built a piercing pattern. Again, very bullish. This level here is going to continue to hold us down. This is a level of a sell level. Already been tested one time. So we'll see if we test this level again. Currently, I guess this is a test. We're only about 3 cents off. So I'd call that a test as well. Stochastics are starting to move to the upside, and again, this is a very bullish candle. Okay, piercing pattern. So I'd expect this market to go higher. Okay, especially at the bottom of a downtrend. Right, that's your daily. I mean your weekly, and this is your daily. Daily finding resistance here with this 20-day moving average of highs and lows. This is a giant zone on top of a zone on top of zone on top of zone. They normally don't hold too well, but again, stochastics are getting a bit overbought, and you might see a move back down here. Okay, similar to gold, but it might pierce a little bit deeper before going higher. But that's what I'd like to see. I'd like to see these levels get tested, confirm that they're solid, and then what will happen is if they are solid, the market will go up. Again, risk to reward. What do you got? A 50-cent risk? What's your reward? About $2 to $3. All right, great trade. That's your daily chart. Like I said before, some of you guys have been asking me to do an analysis on. Oh, and by the way, I put this up here. This is a triple bottom, right? A triple bottom, another triple bottom, right? These are triple bottoms. Why do I show this? Right? Look at this, triple bottom. 1, 2, 3. Bullish engulfing candle. So you want to take that, right? This is a triple bottom. You test the levels 3 times, right? Look at the daily on gold. 1, 2, 3, with an engulfing candle at the bottom. This might be huge, guys. This might be very, very, very big. Again, this is a game of probability. So is this 100% going to go forward and continue to go higher because we have this bullish candle? Absolutely not. But the odds are in our favor. Okay, the odds are definitely in our favor. And again, when you can risk, right now you're at 1232. If you can come back down here to 1210, 1205, buy here, you got about $20-$30 risk, and the upside is more than $80. Okay, actually more than $70 or so. Okay, let's do a quick analysis. Oh, on the Dow, let's do the Dow here briefly. Look what I called that. I mean, I said 16.3 was the target. I made a prediction here. I said that this thing, I wanted this market similar to what I just did with gold. On a perfect market, I'd like this thing to go like this, and it did. If that's the case, that's hopefully what we'll see on gold, just vice versa, obviously, right? I did target 16.3 and currently trading at 16.315 with a low of 16.275. So again, it doesn't look like this thing is losing steam here. It might continue to go down further. If that's the case, then this is what I'd probably like to see. Maybe a move like this and then another move down here. If this level breaks here, the 16.3, obviously we'll see the 16.1.5 or so. And once this level breaks again, being that we're ending quantitative easing, who knows if this level breaks, maybe it'll go higher, maybe it'll just test this level around here and then just continue to tank. And then your next target is definitely going to be roughly around 15.5. Okay, let's look at oil. If I'm looking at oil here, this is, I'm a buyer of oil here, at here, and here. Okay, this is where I would look to buy some oil. Oil right now taking up a huge hit, and between 74.96 all the way up to 77.26. That's your buy zone. I don't have obviously the charts that I have in the other one, but this is where I would start accumulating. And but again, oil, taking a big hit, is already broken down through this level here. You break this level here, then chances are you're going to retest these levels here. So you might see oil come down here to the $75 range, and who knows, possibly even lower. I can tell you this, that the lower oil goes, the more worry we all have to be not because our prices are going down, but because that basically means that the economy is slowing down. If the economy is slowing down, that basically means that the Federal Reserve is not doing a good job with monetary policy. Okay, and if that's the case, they're going to have to amp up the QE. So we have, again, definitely not a good indicator what's happening to the oil market, but really, this is where I'd like to buy 74.96, 77.17. That might be a good time to get in, but again, you have to understand that this market can continue to go down. I'd probably wait for some confirmation before I actually get in here. But this would be your zone. This would be your second zone here between all the way from 67 and up. So again, I highly doubt it'll come down here to the 58 zone. But technically speaking, if this level breaks here, then your next zone will probably be between 65 and 70. And that's where you want to continue to accumulate and then hopefully take this thing much higher. I do expect big inflation within the next coming years. So especially with all the money, $5 trillion in the Fed balance sheets and $17.7 trillion in U.S. debt. All right. I hope you guys enjoyed the video. I tried to make it as fast as I could, and enjoy the rest of your week. Bye-bye.